I want to look at interest rates for a second. Please show me the yield on the 10-year Treasury. Actually, it's moved up a little in the last few minutes. You're now at 3.64%, but that yield is way below where it was just a couple of weeks ago. Larry Kudlow joins me now. Larry, I want to talk about this sharp decline in rates. The 10-year at 3.65, the 2-year well above 4%. That's a decline in rates. Why is it happening, and what does it mean?
Well, I don't know what it's happening, and I don't know what it means. I mean, you're talking about a couple days of trading. You know, look at the 2-year note has gone up 340 basis points year to date. So that's a trend. The 10-year is up 220 basis points year to date. So this has been a tremendous increase. By the way, mortgage rates have gone up over 7% now. They're up about 350 basis points. So, Stu, I would not put any stock in the short-term wiggles and wobbles in this market. Interest rates are going higher. The Federal Reserve is going to have to continue to tighten because underlying inflation is still running around 7%. That's more than 3 times their 2% target. I mean, I think there's always speculation in the bond market. For example, yesterday, the ISM manufacturing report came out, and it was soft. So what they're saying is bad news for the economy is good news for the potential of lower interest rates or less Fed tightening. That's not the game the Fed is playing. And I wouldn't bet on lower interest rates at all. I think that 10-year note, I think all these rates are going to continue to go higher.
Now, you don't always usually speak directly to the stock market, but from judging from what you've been saying, it seems that you don't hold much store in this 2-day rally that we've got now. You don't think it's going to go very far, correct?
Correct. Look, it's hard to explain these short-term wiggles and wobbles. And I don't think any human being can outplay that. That's why I think stocks for the long run, the S&P index for the long run, is always the best investment. Bet on America and American prosperity. We don't have much of it now, but the cavalry's coming, and we'll begin to straighten things out soon. I love relief rallies. The Kudlow Trust loves relief rallies, but right now, I'm not so sure the relief rallies can be depended upon.
So does my 401k. Can't get enough of it, and that's a fact.
Yes.
Quickly, on the West Coast price of gas, $6.41 in California. Is that going to add to national inflation?
Well, look, not per se. I mean, I think your reporter, Grady, if OPEC Plus cuts production, which would be a very stupid thing for them to do for a lot of reasons, global politics, Russia, Ukraine, U.S. relations. But if they were to do that, and the price of oil jumps back over $100, $120 a barrel, gasoline prices are going to surge again nationwide. Right now, they're up about 5 or 6 cents nationwide. But no, California's California, right? Their problem is no pipelines or insufficient pipelines, insufficient oil, insufficient gasoline, right? That's the problem.
No.
California has air conditioning everywhere, but you're not allowed to use it. California has electric vehicles, but you're not allowed to plug it in and recharge them because they don't have electricity because they don't have natural gas.
California's
so they have no natural gas.
California's problem is they've got Governor Gavin Newsom, who is an uber green kind of guy. That's the problem. I got to go, Larry, but I'll be watching you this afternoon. Stop laughing. I will watch you at 4 o'clock
for California.
He's never going to be president. You know that, Gary. All right, Larry. See you later.